Right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast with Tim Stenovec and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms here on another busy earning day. But unlike yesterday, Carol, unlike Monday, the price action in the market decidedly different.
It feels so tortured today. I feel like the back and forth that we're seeing in the equity averages, right? Little change at this point. Not the conviction that we saw certainly earlier in the week. And I think that's a good point. Does some of the earnings, does Meta Platforms change that potentially? I guess we'll have to wait and see, and we'll find out in a few minutes.
I did think, at least earlier in the session, Tesla and the rebound that we saw in Tesla stock today after yesterday's report, which, by the way, wasn't good, would set the tone for today's trade. But that certainly hasn't happened. And, you know, make no mistake, everyone's just sitting back waiting for Meta Platforms to report in a couple minutes.
Yeah, that's the thing, that even though there were some single stock specific stories coming off of earnings that definitely you saw some movement there, you really had to look under the hood to find the action. Of course, all of this is going to change in a couple minutes when we get those earnings finally. But a quiet day, definitely a wait and see sort of day.
Yeah, definitely a wait and see kind of day. And it gets to the question here as to what the market is really looking for. Are they looking for better earnings growth? Are they looking for better profitability? Or is this still about the Fed and economic conditions?
Well, that's a really good point. Liz Ann Saunders over at Charles Schwab, we just talked to her, and she says it's not really about the speculation of what the Fed will do, how many rate cuts. It's really about yields, what we are seeing in reality along the Treasury curves that's really in the driver's seat and impacting the equity trade.
All right, we get the closing bells here in New York. Let's get you through the numbers real quick before those earnings hit. The Dow Jones Industrial Average relatively unchanged on the day. It takes a while for these numbers to settle, but right now we're down about 30-something points on the day, or about 0.1%. The S&P 500 higher by about 2 points, a fraction of a percent, while the NASDAQ Composite higher by 16 points, or 0.1%. I do want to point out two big downdrafts that we saw today. The Russell 2000 down 0.4%, but a huge drop in the Dow Transports, down more than 2, and that was on the back of some bad earnings out of Old Dominion Freight.
All right, some good perspective there. Hey, in terms of the S&P 500, just digging into it broadly, 279 names to the upside in today's trade. Katie, 222 to the downside, 2 unchanged.
And you take a look at the sector level, taking it a step further. Of the 11 sectors, you had 7 in the green, you had 4 in the red. You look at what did well today. It was consumer staples, that sector up about 0.9%. You had utilities, consumer discretionary also rallying as well. You take a look at what was left out of the action, and to the downside, you had industrials leading losses down about 0.8%. Healthcare and financials too, not having too great of a day, but small moves overall, Carol.
All right, get to some of the individual gainers, and Tesla atop that list of the NASDAQ 100 and the S&P, number one, that one gaining about 12% in today's session. We know what it was all about, guys. Even though the quarter wasn't so great, the big excitement about Tesla saying, yep, we're going to accelerate the launch of less expensive cars, and that certainly got everybody excited. So again, Tesla shares up about 12% in today's session. Texas Instruments, another standout performer, had to do with earnings, up 5.6%. Top name in the NASDAQ 100, its biggest gain in about 4 years. Company's revenue forecast indicated a slump in demand may be easing, giving a lift earlier in the session to the overall chip sector. And really quickly, a name that popped up among the biggest gainers in both the NASDAQ 100 and the S&P 500, CoStar Group. This one was up just shy of 9%, just off its highs of the days. And this one, again, up the most in more than a year and a half. It's an online real estate service company, reported first quarter results, beat expectations, and also raising the low end of its full year revenue forecast. So really some outperformance in those names.
Okay, let's talk about some of the decliners very briefly before we do get earnings from Meta. I want to start with a name that Romaine just mentioned, down 11%, Old Dominion Freight. Worst single day in nearly 2 years. Shares falling after the company's first quarter revenue only slightly lagged the average analyst estimates, but certainly sent some shockwaves throughout the sector today. Also, shares of Boeing falling, reaching a new 52-week low. Shares were up pre-market after the company reported earnings. First quarter adjusted cash burn of $3.93 billion was smaller than the estimated $4.4 billion, though it did move lower in the day as the day went on. And then just before 2 p.m., Moody's Ratings downgraded Boeing's credit score to 1 notch from junk as quality control issues weigh on the company's free cash flow. And I did also just want to take a look at what Meta Platforms shares did today. Stock up nearly 40% so far this year, but finished down by about 0.5 percentage point, underperforming the broader indices. The company is expected to report revenue growth of 26% for the first quarter. And And then the company's also expected to report revenue of $36.12 billion, the vast majority, of course, of that being advertising revenue at $35.57 billion.
Let's check in on yields here. This was a busy week for auctions, and while not all of them went well, the overall net effect of it is modest changes that we're seeing across the Treasury curve. You did see modest losses on the longer end of the curve. That pushed yields higher on the 10, the 20, and the 30-year yield by roughly about 4 to 5 basis points. Your 2-year yield, though, down ever so slightly by just about a point.
Yeah. So, I think what we should do is just talk a little bit about Meta at this point, because we are awaiting, obviously, that's the big one in the after hours. And we were talking to our Mandeep Singh, just kind of the role of AI and helping this company among its platforms really in ad targeting. Because I said to him, is AI really, really moving the needle financially on the balance sheet? And said, yeah, it is. And it is specifically when it comes to ad targeting. And so these are things to watch for as this company gets ready to report.
Well, think about all the negative sentiment around the stock 3 or 4 years ago when Apple made those IDFA changes, the idea that it wasn't going to let apps have the data that it previously had. Meta Platforms was able to pivot and adjust by using AI to better target those ads and better target content to its users to get people to use the app more and spend more time on it.
Well, I'm glad you brought that up, because I remember all the agita over that here.
It was a ton.
All you got to do is really, you go into the Bloomberg terminal and you look at that trajectory of revenue growth. Now, they did have a few bumps at the end of, was it late 2022, where they had a couple of those down quarters with a negative sign in front of it. But all told, the amount of revenue that they're generating, $40 billion in the most recent quarter, in the fourth quarter, I should say, and the numbers that we're about to get today, if you believe analyst estimates, are going to come in around $36 billion. That's well above, $10 billion above where we were just a couple of years ago.
Wow.
Yeah, it's quite a turnaround story. And remember, last quarter, they initiated that dividend, which really speaks to this is a mature company now that they feel comfortable enough that they actually are starting to give that cash back to shareholders. I mean, those are some of the stories that I'm interested in, because I really took that as a signal.
It's also a company that's up, 194% last year, and then again up about 40 this year. They are crossing. Romaine, you want to kick it off?
Absolutely. Meta Platforms crossing the wire right now. Let's walk you through the numbers here for the first quarter here. The company's seeing adjusted revenue coming in at about $35.6 billion. That's slightly above street estimates of $35.6. EPS coming in at $4.71 a share. The street on average was looking for $4.30. Here's your guidance for the second quarter. The company sees revenue of $36.5 billion to $39 billion. Now, the top end of that range of $39 billion is just ever so slightly higher than the average of street estimates, which was for $38.2 billion. You see the share reaction there, down about 9% here, but there's a lot more in this release, guys. Jump in when you see it.
Yeah, perhaps that's why shares are lower, is because when it comes to the second quarter revenue expectation, it is, just slightly above at the top end, the consensus. I do want to note that the family of apps revenue for the first quarter did come in quite a bit above estimates, about $500 million above estimates at $36 billion versus estimates of $35.53. And then there was the operating loss from first quarter Reality Labs, which came in below estimates. It was expected to lose $4.5 billion. It only lost $3.85 billion.
But even still, I mean, you take a look at expensive, even with that more narrow than expected loss when it came to Reality Labs, full year total expenses between $96 billion to $99 billion. Previously, that had been seen between $94 billion to $99 billion. So, Carol, I'm not good at math, but that is a bigger range and a higher range.
And that's the commentary that certainly, like you are, catching my attention. So it says, as you said, full year 2024 total expenses range of 96 to 99, up from 94 to 99 due to higher infrastructure and legal costs. They also say we anticipate our full year 2024 CapEx will be in the range of 35 to 40, increased from a prior range of 30 to 37 billion, as they continue to accelerate their infrastructure investments to support artificial intelligence roadmap at the company. So again, spending more, expenses are more. I think that's got to be catching attention by investors.
And they say that's going to extend well beyond 2024.
Yep.
Hey, you guys keep checking out Meta Platforms. I'm looking at Ford right now. The company sees first quarter adjusted earnings per share above estimates at 49 cents. Estimates were for 42 cents. We're seeing shares in the after hours move higher by 3% as we speak. Ford still sees fiscal year adjusted EBIT of $10 billion to $12 billion. Estimates were for $10.45 billion, Romaine.
All right. I just want to just bring you some news coming on IBM. We were expecting to get their earnings. Their earnings haven't crossed yet, but they have actually now confirmed what Bloomberg has been reporting. That deal to buy HashiCorp. They say they are going to use cash on hand. It's about $35 a share. Based on Bloomberg estimates, that would value this deal at around $6 billion. Again, we're still looking for the actual earnings results, but they are confirming that they are going to buy HashiCorp with the cash on hand. Actually, now, Katie, we are getting the rest of those numbers on IBM.
Yeah, you see that IBM first quarter revenue coming in at $14.46 billion. That is versus $14.25 billion year over year. When it comes to their cash flow, they still see full year free cash flow at about $12 billion. You take a look at what shares are doing right now, and they're tanking, Carol, currently down almost 6%.
Yeah, this is kind of interesting. I mean, something we've been looking about is some of their consulting under focus. This is a big company that certainly consults a lot of other companies. We saw Accenture slump, so we're going to look for some more insight into that. But yeah, you're looking at shares of IBM down about 5% in the aftermarket. And a quick check on Meta, if I may, as we head out, guys, we're seeing that stock down about 10% in the aftermarket. So a big hit, certainly, to that name. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place, tomorrow.